What's going on, everybody? This is Lucci here with another episode of Wall Street Porn. Today we're going to take a look at Apple on the short side. Ironically, even after the damn thing has ripped 100 points in the last month. Obviously, you guys are asking, well, why the hell haven't we aired an episode of Wall Street Porn to showcase the money on the long side, which has been good, which has been great. I got to be honest, I have not been playing this thing on the long side. I've been playing Amazon, Google, Priceline, all the other stocks, but this one, to my dismay, of course. But let's go ahead and get into this one and show you guys what happened on the short side. So right here, we're taking a look at a 6-month chart of the action in Apple, and as you can see from the end of July up until now, the stock has been on a pretty heavy bull run, hitting an all-time high of 681 and change, 680.87. You got analysts coming out with crazy price targets on this thing, $1,000, $900, $950. The momentum and the sentiment is obviously bullish, but even after a 100-point run, these things have to sell off at some point. So we were able to catch the top on this thing, and let's go ahead and show you the short on a shorter time frame here. So let's go to 10 days. Okay, so right here, the gap up on August 27th. This is the important thing to recognize. This was the gap that happened after the Samsung patent lawsuit came out in Apple's favor, and the stock jumped up about a good 14, 15 points after hours to hit those all-time highs. And if you take a look at what the market did from that day onward, we basically have done nothing since then, because everyone was awaiting comments from the Fed and from Bernanke concerning easing further stimulus to help out this shitty economy. Basically, everything just went dead and completely flat, and that is, again, one of the reasons why Apple didn't continue its run right there to $700, and people went ahead and started taking some profit towards the end of that week, which led to a decent sell-off in the stock, providing an opportunity there on the short side. Okay, so let's get even closer. This is a 5-day chart. Take a look at the gap down that happened on between August 29th and August 30th. You can see she gapped down to about 670, and this is kind of when my idea started to come about that she could sell off down to about 660. And then it was all about just watching the tape to make sure that there was actually some weakness and there was actually some sellers pushing the stock down. So I saw that right off the open. The stock was able to get down to about 666. I started building into the 665 weekly put off of these rallies. So whenever you're shorting Apple, you got to realize she's going to be rallying 2 to 3, maybe even 4 points against you, and it's important to watch your option through that to see if they're still holding the option up and they still expect this thing to come back down, which is exactly what was going on. And after each time it tried to make a rally, it would go ahead and punch new lows. This rally right here kind of scared me a little bit because it was coming up to the end of the day. I had a large position and I had to figure out if I was going to hold overnight. But the sell-off towards the end of the day and in the last hour, and if we zoom in on this right here, you can see during the last hour before the close, the stock was able to push through 665, and that's what gave me the confidence to go ahead and hold that overnight. Okay, so let's go even further. Let's go to an intraday chart with the pre-market action. Okay, so as you can see, I got my gap down the next day, but that was very early in the morning before the markets actually made a giant push in the pre-market because of expectation that Bernanke is going to come out and say something positive. So as you can see, if you look at the indexes, we rallied quite a bit in the morning session, and it was all basically a setup for this gigantic drop and to get people buried in longs just so they could chop them out for most of the day. Again, there's a lot of manipulation going on in this market, a lot of algo trading, so it's very, very difficult to kind of hold overnight and see a position through and continue to have your conviction. So as you can see, this thing rallied against me quite a bit and then just had a blow-off sell, which gave me my exits on the position. So let's go ahead and show you the option, the 665 weekly put. Okay, so right up here, you're taking a look at a 5-day chart or a 3-day chart of that weekly put. So I started getting in this day right here, and I started getting in from an average of around $2. And towards the end of the day, I started buying heavy, $4, $3 and change. So my cost was basically like $2.90 to $3, and I was confident holding it overnight. As you can see, this huge rip in the option at the end of the day gave me that kind of conviction because the tape looked good, everything looked good, and I was pretty sure we were going to get a sell-off before the Fed came out and before Bernanke came out, and I was pretty sure we would even get a sell-off after the comments came out as well, because we've been rallying so hard in the market off these comments of further Fed easing and everything like that. Obviously, to my dismay, there was a huge gap down in the price, and I was down substantially off the open. Fortunately, the tape told me, we were going to sell off again. The stock went right back to 665, as you can see, right off the open. And I was able to hold on to that position, actually buy more, and sell all the way up from about $5 to $7. The option hit a high of $8, so there was plenty of range here. But you see how quickly this happened. I mean, this happened in minutes, and then the option never went back up here again. So this was a very complicated trade. I want to make sure I do mention that. Alright, so let's get to the juicy shit here. How much money are we talking about? So I had a little over 600 contracts, 620 contracts at an average price of $3. That's going to give you a cost of around 180K, 186 to be exact. Now my sells, if you take a look back at this chart here, my sells were all over the place. I mean, again, when you have 620 contracts, it's not like you're going to throw out a 600 contract order. You can't do that. So, I'll throw out 50 lots, 25 lots. In order to amass the position, I'm just throwing 25 lots the whole time and 50 lots just to build a position. And you got to manage it through all of these damn pullbacks. And you see this pullback here. I was up a considerable amount of money right here. And then my option went from $4.50 down to about $2. And again, it ripped right back up to the highs at the close. So I was buying more here, buying more basically everywhere. So again, the contracts and number of orders that I actually send to do this is absolutely absurd. So it's well over the thousands. So I sold all the way from $5 to about $7. A lot of it I was able to sell up around $7. So let's say you get 620 contracts sold at an average price of, let's say, 6.25, and you get a total of $387,500, which leaves you with a total profit of $387K. minus the 186K, and you get yourself a whopping 200 grand. So I walked away with a little over $200,000 for this trade. Usually we try to showcase moves where you can put down, let's say, 10 or 20 and make 5 or 6 times. If you go back over this chart, it was possible here, but you can see how quick it happened. So again, this is not for the faint-hearted. This was not an easy trade whatsoever. And we can go even further by saying, you know what? You go back to this Apple chart and you go back to, let's say, a 3-month chart. The long side trades were much easier than this short trade. A lot easier. So in reality, I was a fool at the end of the day for not taking these long setups. Alright, so that about wraps it up for this episode of Wall Street Porn. Thank you guys for watching. Hope you guys enjoyed it. And quick shout out to everybody in my chat room who saw me go through absolute hell to make this money.